Hi, my name is Charlie Jewett with the Renovating Retirement Podcast, and I want to talk to you today about land banking. Really, land banking done right. Doing what the stock market used to do and doing it better than the market ever did. Now, why do we buy stocks, bonds, and mutual funds? Why is the diversified portfolio of risk with a side of fees the most popular investment by far in the United States of America? Well, there's a couple of reasons. One could be you want income from your portfolio, immediate income coming off of your portfolio now to cover living expenses. That is not what land banking is for. There are other tools that do it better than the stock market, which you can learn from some of my other videos, but land banking is not going to compete with dividend stocks or taking an income from bonds and things like that. How about just gambling, just fun, playing in the stock market or day trading, things like that? Land banking is not necessarily going to replace that, although the rates of return that you earn or the amount of money you end up with might actually be higher than that. But that's not really what I want to talk about today. What I want to talk about today on this video is the buy and hold strategy that's so popular for retirement planning. What do people say about the stock market? It's more risk, more reward. It's worth it if you can do it long term. If you can hold it for 10, 20, 30, 40 years, it should go up at 8 to 12%, et cetera, et cetera, et cetera. And I want to talk about that buy and hold strategy and really take a peek and see, do stocks, bonds, and mutual funds really do that better than everything else? Well, first let's talk about the change, the most dramatic, most important change that has happened in the market in our lifetime. From 1970 to 1999, the stock market literally compounded at a real rate of return using the real math at 13.78% per year, almost 14%. To put that in perspective, a $40,000 account over 20 years would have turned into over $500,000, about $530,000. But what about the most recent years? I don't care about traffic from the 80s or weather reports from 1995, so I certainly don't really care what the market did in a 30-year period over 20 years ago. In current times, from 2000 to 2019, so starting with the dot-com crash, the market has only averaged 6.01 per year. Does that make a difference? Well, yes, it does, a little bit. The same $40,000 retirement account over a 20-year period would have only turned into $130,000, $400,000 less for this 20-year period. 6.01% is actually 56% less than 13.78%. So, will I have 56% less money, Charlie? Is that the way it works with compound interest? No, it's not. You would have ended up over those 20 years with 75% less money to live on, or God forbid, you are in retirement taking an income from this portfolio and it earns less interest. That means you're running out of money, or at least, best case scenario, you cannot keep up with inflation. The best advisors in the country don't say, well, we sell stocks, bonds, and mutual funds. We have to find a way to keep selling them. No, the best advisors in the country, independent fiduciaries, say, what else can we do for our clients now that the stock market is not performing the way we expect? Is there anything else besides stocks, bonds, and mutual funds that consistently goes up over time if we buy and hold? And surprise, surprise, some famous people have already figured this out. Here's a quote from Will Rogers: "Don't wait to buy land and wait." Okay. How about Mark Twain? Buy land. They're not making any more of it. That's a cool quote, and they really aren't making any more of it. Well, land also goes up over time if you buy in the path of growth. But where do we buy this land, you might say? There's 2.43 billion acres of land in the United States alone. Where in the world? How am I going to find the right place to buy it? Well, we've done all that research for you. We have 18 years experience. Great news. We've narrowed it down for you to just 2 cities that have been exploding in value, and we can even show you which parcels to buy. Don't tell anybody, it's a secret. Is it really worth considering this, Charlie, you might say? Do I really have to think outside the box and change my portfolio, do I really have to grow, Charlie? Well, I'll let you decide, but just one study that was done over a 17-year period, 9,000 properties, in this one area, these 2 cities that we're going to teach you where to invest, found these results. Average property annual appreciation was 24% per year compounding for 17 years. The average hold time, because land has strengths and weaknesses, you have to hold it until someone buys it from you, which, by the way, we find for you and bring those offers. The average hold time was 3.7 years. Pretty nice. 24% per year for a 17-year period. You only had to hold it 3.7 years. I like it. Would you like a copy of that report? I can send you one. Just reach out by texting me if you have my number, or looking me up online. You can email me, or whoever gave you this video, you can email them, ask them for a copy by calling them or requesting by email or text. Just send us an email or a text and say, hey, I'd like a copy of that report about that particular area where the market went up 24% per year for 17 years. Now, remember this, $40,000 over 20 years, going up at 13.78%, turned into $530,000. That's awesome. That's pretty good. What's the most recent numbers for the last 20 years? $40,000 over 20 years, the last 20 years, only turned into $130,000 because the market has only given us 6.01%. What about the land? Is it a guarantee that it's going to go up at 24% per year? No, but it's a true historical performance, the same thing that keeps us in the stock market. So going apples to apples, looking at the past and saying, I sure hope to get that, why not use something that made 24% for 17 years? If you could make 24% on $40,000 for a 20-year period, you would end up with $3 million almost. Even better than the stock market would have given you in its heyday, in one of the best 30-year periods we can even find. So if you're looking for the new and improved buy and hold strategy that could possibly take your account and give you a lot more money or a lot more growth than the stock market has been willing to give us, maybe consider land banking done right. Here's a quick comparison before we wrap it up. How do you measure a wise investment? How do you measure the stock market against land banking done right, let's say? Well, liquidity, safety, rate of return, tax advantages, and fees could be a good place to start. Those are 5 important ones to me when I invest my money. Well, let's look at liquidity. Who wins? The stock market wins. Why? The market's 100% liquid. If you have money in the market and it's up, you can take it all out. If you have money in the market and it's down, you can take it all out. It's totally liquid. It wins. Let's be fair. Land banking is not liquid. You can't take it out. You have to wait until the purchase offer comes in and we present it to you. And so it loses. Boo, land banking. It has a weakness. Boo. Well, let's look at the rest of them. How about safety? Stock market goes up and down all the time. So it loses. You can actually have your account go down. What about land banking done right? Well, in theory, it could go down. We've just never seen it in 18 years, or if we track back further in other growth areas, we've never seen volatility where it's up and then down, or a client losing money. It's just consistently grown if you buy in the path of growth. Location, location, location. Those are the 3 rules of investing in real estate. All right, so land banking wins 1. Stock market won 1. We're 1-1. What about rate of return? Well, stock market's only made 6.01% for the last 20 years. It loses. Why? Because land banking did 24% for 17 years, and it actually seems to be growing faster right now, which we can show you. All right, land banking 2, stock market 1. Tax advantages? I think they're kind of the same. It depends on what type of money you put in, but if you put Roth IRA money into stocks, bonds, and mutual funds, it grows tax-free. Roth IRA money into land, grows tax-free. IRA money in one, taxable income. IRA money in the other one, taxable when you take it out, taxable in the income, same. How about non-qualified money, capital gains, non-qualified money, capital gains? I think tax advantages is a tie. How about fees? Ooh, this is a big one. If someone did an amazing job for you in the stock market, you gave them $100,000 and they turned it into $1 million, you would be rewarded by them charging 10 times the amount of fees they charged in the beginning. Why is that? Because your fees in stocks, bonds, and mutual funds are relative to the size of the account. $100,000 at 1%, maybe you don't pay 1%, but just easy math. $100,000 at 1% costs you $1,000 a year. If you go up to $1 million, your fees are now $10,000 a year. One of the tricks we're going to teach you that we use and that wise investors pay attention to is in land banking done right, the fees are fixed at the lowest the account will ever be. When you purchase, if you buy it for $100,000, your fees are fixed. And if it turns into $1 million, $2 million, $3 million, $10 million, $25 million, your fees will be exactly the same because of the location. Now, what are you willing to give up for that 100% liquidity that you get from stocks, bonds, and mutual funds? I've taken thousands of families through these questions, and what you find is we overemphasize liquidity and give up safety, rate of return, and we overpay on the fees because we just don't know what the alternatives are. Well, we found an alternative. Let us show you land banking done right for a portion of your portfolio. Certainly don't put every dollar in your life into any investment, but let us show you land banking done right for the portion of your portfolio that used to make 10, 12, 14% in the stock market, since the stock market isn't doing that anymore. Because land banking done right is the new and improved buy and hold strategy. This is Charlie Jewett with the Renovating Retirement Podcast. Reach out and let's have a conversation about land banking and how it might fit in your portfolio.